Good morning, everybody. Hey, welcome to Thursday. It is Thursday, April 21st. Hope that your week's going well. We've had a couple of workshops this week and are excited about the results as we head into this weekend here, not too far away. First weekend after tax season. Excited about that. Hey, you know what? It was not a bad day yesterday on Wall Street. We'll look at that and more in just a few moments when Dave joins us. Before we do that, though, let's remember there's only one thing that any of us can control when it comes to our portfolios, and that's risk. The question is, how much risk do you have in your portfolio? If you don't know for sure what your risk number is, that's why we developed the core retirement design to help you design the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. With that, we've got Dave joining us and up next.
FM and Kelly, 40 now, 20 before 9. How's your money doing today? How's Wall Street treating your IRA and 401k? Let's find out, because yesterday wasn't half bad. Downtown we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How you doing?
Good morning, Dave. How doing? Well, today it's winding down the week one more day, and then we get to the first weekend since tax season.
That's right. You guys that make money in the tax business are really happy to have the first weekend after tax season, aren't you?
That's right. Yep. Looking forward to it because I didn't slow down any this week. I've been a busy guy. We did a couple workshops Tuesday and Wednesday night, so been staying busy.
All right, well, I'm glad to know that. Setting the table for the morning is we got a lot to talk about today. Yesterday was a good day on Wall Street. Dow was up by 241 points. Standard & Poor's up by 38. NASDAQ didn't take back everything it lost the day before, but up 163 is still a doggone good day. And you and I were talking before we went on the air, and you commented on the amount of travel stocks that were doing well, and I'm looking at my top 5 gainers on the pre-market action this morning. Travel stocks in general are going crazy. It's kind of being driven by an earnings season surprise, I gather.
It really is. You know, Dave, the airlines just have busted loose. Not that they had a good quarter last quarter. Don't get me wrong, but it's the expectations going forward. Now, American Airlines did come out and they did report a smaller than expected loss, but they've come around and basically said, hey, we're predicting profitability for the current quarter we're in right now. And that's a big deal. They're up 10.3% this morning.
Yeah, all our big winners all right now in the pre-market trading are out of the travel sector. I noticed that Delta made the announcement, and they're going against the flow. The people they put on the no-fly list for misbehaving during the mask time, they're going to give them one more chance and let them on board Delta. And the other airlines are saying, no, you're off for good. So Delta's taking a chance on the ne'er-do-wells from the mask period, too.
Well, hey, you know, you got to give people a second chance. It was an emotional time during COVID. And so we continue to watch that. But the other airline that reported, Dave, was United Airlines. Now, they did lose money. They lost $4.24 a share. That was 2 cents more than expected. Their revenue was slightly below forecast. But again, they expect to turn to profitability this quarter. And so they're up about 8.2% this morning. So some good news there. And let me tell you, I mean, I just know I've got to travel a little bit the next month or so, and airline, they're getting their money on flights right now. You can't find hardly cheap flights. They're all getting up there back to, I think they're higher than what they were pre-COVID. So
they really are. That the same thing qualifies in reward mileage and whatnot. I'm kind of stashing frequent flyer miles on one of my accounts just on the presumption I'm going to have to make a trip at some point without a lot of notice. And right now, a free flight on my frequent flyer card is like 61,000 miles for a free flight, and it used to be 24 many years ago. It eked up to 35 and 40, and I kind of said, oh, okay. I looked at it lately. It was 61,000 miles plus a little money in order to get onto an airplane, and that's reflected on cash as well. They're definitely getting their money out of it, aren't they?
They really are. And hotels the same way. I mean, they're all, folks, it's, they're making up for COVID, believe me.
Oh, Absolutely. We got a pant load of reports to get into today, and the airlines are just simply the kind of lead story because all of the market news going up. But we do need to mention a couple of macro things that came up. Flies in the ointment abound. We were talking about this the other day about how we're getting mixed messages as to whether or not a recession was imminent. Start out with the unemployment picture. That's all good news. 184,000 first-time claims last week, abnormally low again. And the number of continuing claims decreased again to only 1.42 million continuing claims. And I honestly can't remember a time that number's ever been that low before.
Yeah, me either. I mean, that's to be less than 2 million is just a
Mm-hmm.
big deal. And I mentioned this at my workshops the last couple of nights is that, we still have 10 million job openings and only 2 million, less than 2 million, less than 1.5 million people now that are looking for jobs.
That's 10 million openings and and under 2 million people looking for jobs. That's not a good sign. But it does indicate that at the very least the employment market is still booming, one of those mixed messages we were talking about yesterday. On the other side of the fence, the Philadelphia Federal Reserve Business Outlook Index came out this morning. They were expecting, and again, these indexes have different formulas. The actual number doesn't matter, but how far off they are does. They expected an index of 20.5. It ends up coming in at 17.6, which is a big miss and certainly disappointing. So once again, mixed messages. Recession, no recession, who knows, right?
That's right. And and you're right. That was a miss. And it's also down from where it was last month, substantially.
True. It was 27.4 in March.
Yeah, exactly. So that's a big drop to 17.6. Hey, the other thing that came out yesterday morning after you and I talked was existing home sales. And it was basically in line with expectations. I mean, it was down from where it was in February because it's a March number that we're getting right now. But in February it was 5.93 million. In March it came in at 5.77 million, a little bit above what they expected, but still not a bad number given interest rates are going up.
Absolutely. I mean, a modest decline you can deal with just simply on the grounds. Well, one of my real estate guys is saying the people that are actually shopping right now are the serious buyers because they can qualify for a mortgage even at a point or so higher. And, serious buyers are what they want anyway, right?
Exactly. Yep. Absolutely. You want somebody that really wants to buy a house.
Absolutely. Back to the market as it goes. Yesterday, up day, and one of the ones that was kind of swimming against that up tide we had, boy, Netflix, we talked about their report and actually losing some subscribers. They were down like 35% yesterday, another 4% drop pre-market this morning. I mean, on a scale of 1 to CNN plus, they're like an 8 right now, aren't they?
Yeah, they're struggling. And I think it's going to take a little while, right? They've got to find that bottom, and the investors got to find that bottom. Where does it bottom out at? And people think it becomes a bargain again. And that once they hit that spot, you'll know it because then it'll start pumping back up.
Absolutely. And in a business with so few barriers to entry, Netflix looking at number one, that custom of sharing passwords, adding to the fact there's so many new tigers in the jungle. The speculative stocks where there's not a lot of capital investment involved can really swing wildly, and Netflix is kind of becoming a poster child for that, aren't they?
Well, they are, but they're doing some things to try to battle that, right? They're getting their own original content. Let's face it, the more original content they have and the more popular that content becomes, it will drive people into Netflix. Now, the one thing that's kind of neat about streaming services is that you can go after the season's over, right? Subscribe for a month, binge watch and be done. But still, it'll drive some folks to their service.
A few new accounts wouldn't hurt them one tiny little bit right now. Talking about Netflix on the downside, on the upside, my lead story on all of my tip sheets this morning was, holy cow, Tesla, an 81% sales increase in the first quarter. You think that increase in gas prices helped them a little?
It really did. And just availability. I was talking to a lady last night. It's like, it's hard to find a new car or even a used car that's halfway decent. She says, I'm going to start looking at Teslas again because price wise, they're not so far out of the market anymore, given what new car prices are going for. But Tesla, they had a record quarterly profit. They beat on top and bottom line. They did come out with some little caution, right, that production would be constrained for the remainder of this year. So that's a big deal. So they're going to they continue to battle that shortage of computer chips, and not just chips, but other parts as well. They expect increased deliveries and some of that stuff to come on, but they're up 10%, almost 10% this morning.
Even with a marginal guidance report on their quarterly, that was enough to still go up by 10%, right?
Yeah, exactly. So not bad there.
What else hit your eye this morning on the reports for earnings season?
So a couple household names. AT&T, we talked about AT&T spun off their Warner Media unit earlier this year, but they reported without that, and they beat by 4 cents a share. Top line was above expectations as well. And so they're getting a little bump today, up 1%. Let's talk a couple things that aren't doing so well. Sleep Number bed's not doing real well. They really kind of missed on top and bottom lines for the quarter. They came in at 9 cents, which was 33 cents short of where they were supposed to be. And so they're getting beat up pretty bad today, down 10.25%. But Dave, that's not the worst one I have out there.
Afraid to ask.
What about Xerox? I mean, talking about, and that's kind of an IBM, right there. Xerox is the old line copy machine, and man, they missed by a penny a share. Not bad, but they still continue to get hurt by inflationary pressures and supply chain issues. And so they're getting really whopped this morning, down almost 20% to $15.91. And that's almost $2 less than their 52-week low right now.
Ooh, that hurts. Yeah, it was funny. Xerox's biggest problem 20 years ago was protecting their brand name, because Xerox had quickly become a generic for making a photocopy. Today, you say I'm at a Xerox something, and the kids in the office look at you with crossed eyes and say, "What are you talking about?"
Yeah, that's no longer the case, is it?
Absolutely not. Resetting the table, up day yesterday on Wall Street, 45 minutes before we open this morning, Phillip. Have we got some good news on the futures?
I'm going to say, Dave, the futures are all in green ink when it comes to the indexes. I mean, you got the Dow up almost 0.7%. The S&P 500 is up 0.9%. The NASDAQ 100 is blowing it out. It's at 1.3%. The Russell 2000 is up about 0.9. So everything's really looking good on that side of the coin. However, on the other side of the coin, the commodity side, silver's getting whopped. I mean, they're down 1.6% below 25. They're at $24.86 an ounce right now. That's a pretty substantial drop for them.
That industrial demand report we talked about yesterday must really be hitting them.
It must be. That must be the one thing that's really causing that. Gold is down 0.25%, but still nothing driving bad. Crude oil is below where it was yesterday, Dave. It's at 102.55, and yesterday was like 103 something. It's up about 0.4% from where it closed last night.
Cool, and that's down from my delayed quote too, so I like the trend as well. Overseas markets, the Asian rim is that usual mixed bag. Japan is up, but China is concerned about all their shutdowns, and the Hong Kong and Chinese mainland markets both off precipitously last night, as a matter of fact. Europe is looking at yesterday for us and our futures today and going, whoopee, I got 1% increases almost across the board in Europe right now. Keeping tabs on what's happening on the market, that's important. But as far as your retirement's concerned, having a plan is what matters. How do I get that plan to contact you, Phillip?
Absolutely, Dave. That's why we developed our core retirement design to help you design the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And we'll tie the ribbons on the week together right here tomorrow morning at the same time on Light FM. Phillip, thank you so much. You have a good day, all right?
All right, man. You too.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope, again, your week is going well. If we can be of any help to you when it comes to your retirement planning, please reach out to us. That's what we're here for. 863-382-0037. Hey, until tomorrow, have a great day.